A range of options to get out of US shale, from a trade sale to an IPO. What's your preferred strategy to make a clean exit?
For now, our preferred strategy is a small number of trade sales, but we're keeping the other options there, so that we can, proceed with a reasonable amount of pace. But for now, we think a trade sale would work best.
How quickly are you hoping to complete an exit?
I think it's too hard to say that. We have to be patient. We know what our businesses are worth. We'll continue to add to their value through our technology and sort of modest investment. But on the other hand, we don't want to lack urgency, and that's why we have other options in the wings if trade sales look too complicated and too difficult to execute in a reasonable time.
Andrew, it's interesting because, on Monday we heard from Total, the French energy giant. They agreed to buy the oil and gas assets of AP Moller Maersk. And one of the things Total actually said is US shale wasn't at the top of their wish list because it's too expensive. With that in mind, do you agree, first and foremost, about it being too expensive? And does this concern you about finding available and interested buyers?
Well, we actually have sold some parts of our position over the last 2 years. This isn't something that's happened in a sudden way. We've already halved our acreage, and about the remaining half until today. Half of the remaining half was already on the block. We've now, of course, put the whole lot on the block. There's a lot of trades that happen. What generally happens on the trade sale is that people, get proper engineers involved, they do proper assessments, and they seem to go for what it's worth. It's often quite difficult to compare trades because they're dealing with different types of acreage, different horizons and so on, which have got different prospectivity. But we're talking to many parties and are hopeful.
Andrew, does the decision to go for a total exit, was really the impetus, the pressure from these activist investors?
No. We've been working towards this. 2 years ago, we made it clear to most of our investors that when we looked around the world, we saw very limited opportunities to expand our business in oil. We felt that the margins in gas, shale gas, were not going to be attractive to us relative to all the other businesses that we can invest in BHP. And so we started pivoting back towards conventional oil and gas. And that meant at the same time as we were cutting capital in shale, selling the acreage in the way I described it, cutting the number of wells, we significantly increased our exploration for conventional oil. And as part of these results, I've been able to announce some real successes there. In the past year, we've been the first company back into conventional oil, first foreign company in Mexico. We early days, but we've had some very exciting drilling results in the US Gulf of Mexico. And earlier on, we've had some good results in Trinidad, with a lot more prospects in all three of those areas, Trinidad, US and Mexican Gulf, still to drill. So we've been moving in this direction for some time.
Andrew, it's hard to not see it that way, is it, given the timing, the sort of, barbed pressure coming from the likes of Elliott, and now this decision, and also the caution that you've expressed when it comes to the Jansen Potash project. Is it right to read these decisions as, at the very least, you kind of feel like you've got them off your back for a while?
We have many shareholders, and we talk to all those shareholders all the time. The decision on potash, which other companies in potash have made as well, is a realization in recent months that the window for new greenfield projects is moving out. But to be honest, there was a shareholder who I think misrepresented our position on potash. It's an option. We deal with options to invest, generally a lot more than we actually choose to exercise because it's such an uncertain world. And while we hold them as options, we continue to improve their potential returns so they get through our very disciplined capital process, or we sell them down, or in some cases we abandon and regroup entirely. And you look at the history of BHP, and there's a slide in our presentation today, it shows that we've done that many, many times. We have 2 projects that we approved during the course of the financial year just reported, which we waited 5 years to get the capital down to see the market ready. We had 2 projects that completed this year that actually started about 4 or 5 years ago, but after a similar amount of delay. And in the course of the last few years, we've had several projects where we've chosen to sell them down, in some cases exit completely, often for a lot more value than we've invested in them. So, this was only ever an option. We were being transparent with our shareholders about when things would be considered, and we're being transparent again, saying, we don't think the market will be ready, the technology will be ready, for at least another 2 or 3 years. And so, we tell people that. In the meantime, we do all the things we do with all our other projects to make them investable or not. But I repeat, if it doesn't meet our very disciplined capital framework, then they don't go ahead. And we have been extremely disciplined in capital. During my time as CEO, the kind of capital that we need to thrive as a company has dropped from numbers that used to be quoted, much higher, to something that we announced today that we can survive for the next few years on a capital budget, less than $8 billion a year.
Is it likely that you pursue some of these further changes that have been demanded or asked for from these dissatisfied shareholders, further strategic reforms? Are you looking at an overhaul of the board?
Well, I'm not the chairman of the board. I'm the CEO of the company, and that's a question that with the split role in an Australian company, you have to direct towards the chairman.
Andrew, let me move on to the results. Very impressive, clearly, even though it was, a market miss. The profit rebound has quite clearly been this rebound when it comes to iron ore and broadly across commodities. What's your outlook? Do you see stability, or do you see a big question mark over the China demand side of things?
Well, look, it was a miss at the earnings line, and that's often a number that's very difficult to get right. We had some factors like Samarco, some of our provisions for closure, and some of the foreign exchange effects on our debt book, and 1 or 2 other things that others can look up. But it was a market beat. On the things that really mattered. We had a tremendous free cash flow, up almost 3.5 times of 12.6 billion. And even the earnings, which were a miss, were an increase from 1.7. 1.2 to 6.7 billion. So this is very, very strong in that sense. And behind that, we're looking at 5 years where we've taken 40% out of our costs to deliver the kind of result today, which means that the majority of that extra cash flow that comes from higher prices can be transferred straight through to shareholders in the form of an enhanced dividend.
Now, Andrew, it's easy to perform with the tailwind, right? But with that seem to be fading, particularly out of China, where do you see continued profit growth to come for? And also, what are your forecasts when it comes to China?
I think it's unfair to say that we're performing with a tailwind. When you take 40% out of your costs, and you're able to flow all of that tailwind's benefit, even though there's a lot of things that come off it, like higher supply costs potentially, some foreign exchange effects through to your investors. I think we've performed way better than what the tailwind would say. So to your question on China, I would say right now our outlook for this year is probably a bit more optimistic than it was maybe a few months back. We see the reforms in China playing very well in terms of stimulating more demand, but also removing some high-cost supply that creates an opportunity for us with our high-quality products in the market. And although some prices are a little bit higher than you think they would be, given the marginal cost of the higher cost producer, we don't see them falling back to anything like some of the lows we've seen more recently.